Good morning.
Hello!
Good morning,
Me and my curly
everyone.
hair.
Where is Kay?
He's running late.
Oh no.
But
All right. Yes.
he will be in 5 minutes. So come in 5 minutes. Good
Let,
morning, everyone. Happy Sunday morning, evening,
let,
everyone.
let me just share this to the groups. Sorry about that. I'm a little late myself. How are you
How
doing, Anna?
I'm going great. It's getting really cold in here. Like we have to crank up the heat because everyone is wearing hoodie. We're wearing extra blanket, extra long sleeve. But here we are. It's November 19th, Sunday, and welcome. Each one of you, please share our live today. It's a very interesting topic so that everyone must know, even if you are a newly immigrant nurse or you're already here in the US starting to work. Please share to your friends, or your group mates, or your Facebook pages. Sharing is caring, knowledge is power. So you're gonna learn from our mistakes in handling our classes before. While we're waiting for Kay and Purple is sharing it so everyone can join and learn more about today one of the hottest topics in the fora. Which I received a lot of messages last night, Purple, like people are
Uh,
asking, and I'm not answering them. I told them, stay tuned.
right.
How about you,
And
Purple?
it's it's best for them to join us, but we've had really good run this month about financial stuff related to
Mm-hmm.
nurses, and of course today we are going to talk about taxes, and I think that's one of the things that nurses should know, immigrant nurses and even local nurses here in the US. I think we all need to learn something from taxes because it affects our finances, our bottom lines.
Mm-hmm.
Um, eventually. But anyway, welcome to everybody. This is your episode number 9, and we are going to talk about tax basics today and the DNP Unlocked Disruptive Nurse Perspectives Immigrant Talk Show. I'm with my co host Anna, and co host Kay is going to be here very, very soon. All right. And please tag your friends, guys, and share this show to your timelines or to your friends. We are
Mm-hmm.
live streaming in my Facebook channel, YouTube, and LinkedIn. So if you are joining in any of these social media, please participate in the comment section. I think we have an echo, Anna, or something.
Yes.
I'm not sure if it's me or anyway, so to cut it short, you guys are, we are encouraging you to join us in the comment section. Give us your thoughts. We're gonna have open forum later. We're gonna talk about different taxes, tax principles, and again, disclaimer, Anna, as we have talked about in the
Mm-hmm.
past. We are not providing professional services. We are not CPAs. We are not tax preparers. We are providing perspectives from nurses who are needing to learn, be smart about their money and about their finances. One of the things we advocate for in the DNP Unlocked. All right. And and I just learned one thing that as we live stream this in my LinkedIn channel, we actually couldn't see the comments stream in
Oh.
from LinkedIn Live. So I guess it's an API issue or API
Oh.
limitation. So
Mm-hmm.
we're not gonna be able to see LinkedIn comments. I used to see them in the past. I don't
Mm-hmm.
know, something happened with my connection to LinkedIn where I don't see their comments. So let's see if it's gonna work today. I did not change anything in the settings. But anyway, so guys, are you ready to talk about tax basics? Because we are so ready. Like Anna was saying, she was getting a lot of comments, a lot of questions last night or yesterday, but we are here to address it again in the perspective of a nurse, not so much of a CPA or a tax preparer. It is still best to consult a tax preparer or
Mm-hmm.
CPA depending on your individual financial setup or financial status.
Yes, you are definitely right. We are nurses like you. We were once immigrant, now we're U.S. citizen, and we would like to share what we've been through when I found out what is IRS, why do we have to file tax. Because I came from the Philippines and BIR is the counterpart of IRS.
Right.
And we never really file it. The HR does it. So, but now that you are planning to go in the US or you are already in the US, every year it's like Christmas, holidays. Tax season is part of American dream that you cannot really run from it. So now you have to embrace it with equip yourself with knowledge and information so you will know how to lower your income tax or what to claim or what to file. And nurses, these informations are free. You don't have to pay for anything to make the most out of it. Get your notes, your pens, and let's all learn from today's talk show topic, the basics of taxes,
And of
right?
course, Anna, if they missed the show today,
Mhm.
be aware, guys, that I'm recording this live stream in YouTube as well. So all my past shows with Anna and
Yes.
Kay, and even the old series of my DNP shows, it's all available in YouTube, so you guys can watch it. In fact, you can go back to YouTube at Dr. Nurse Paul right now and see all the other episodes that we
Mhm.
did, all past 8 episodes for your disposal. And I think it will benefit a lot of our immigrant nurses, especially if you're barely coming here to the US. This might not be appropriate for you right now, but
Mhm.
eventually it will. I like to put it this way: if you do your assignments ahead of time, then you will not cram, you will not rush, you will not make um, errors or problem with decisions because you are already informed or aware. So kind of like that in your personal life and career life
Mhm.
in the US. And I think Kay is joining us in a few minutes. And how's the weather there, Anna? Here in Texas, it's a beautiful. In Houston, Texas, where I'm streaming from, it's a beautiful, if I'm not mistaken, 70 degrees, which is how I love it.
I'm so jealous of you, Dr. Nurse Paul.
It's actually
Right,
60. I'm sorry. Yeah.
right now we are on the 30s.
Oh no.
30. Mhm. The
I'm
other,
not.
the other day, the other morning, it was 22.
Yeah.
So I was wearing my hat. And I'm in my house, right? I was wearing my scarf, my gloves. It's really
Right.
getting cold. It's about
Right.
time.
For
When are
for
you
me,
coming here? We have to spend
uh,
white Christmas. It's around the
probably
corner.
next year, right? But for me, uh, snow is only cute in photos. I really couldn't do it. I have seasonal allergies, and it really flares up when it's cold. So sometimes I bleed because of too
Mm,
much congestion. But that's about it. Other than that, it's cute in photos. And
exactly.
I'll be in Barcelona next week, Anna. So when we stream live for Dr. Nurse Paul show, I'm sorry, the DNP Unlocked show. I mentioned the DNP show before. The DNP Unlocked
Mhm.
next Sunday, I'll be in Barcelona, Anna. So I was told by my cousin, who will be with me there, is I think
Mhm.
it's 40 degrees over there. So we'll find out. I
Oh,
probably will be bundled up in a sweater and a jacket while I'm doing the show.
don't forget your scarf, the Elvis scarf.
Alrighty. But anyway, so today, guys, we're going to talk
Oh,
about.
someone's
We
coming
just said
Ah!
that
in.
she looks like she's in a
Hi.
hotel.
Good
Where are
morning,
you?
everyone. I'm trying to look for
Where
a
are
good
you
spot.
today?
I'm
Where?
here in New York City, Central Park area. If you're around here, say hi.
Oh, New York City.
Yeah, it's my favorite place for winter. So I love New York City winter. It's so cold last night.
Right,
Yeah,
Kay?
we're trying to live the American dream, whatever you see on the movie, we try to bring the kids where the Home Alone
Mhm.
kid went, and then there's Serendipity Central Park ice skating rink. So these are
Yeah.
the things that we always do around here for the people who would like to come to the United States and try to
Mhm.
redo the movies they see.
Right, right. Well, we
In
need we
places.
need to meet up in New York City so we
Yeah.
can all stream live.
Yes.
But
Wearing
we
Yeah.
our bundles, being bundled and so
but
cold.
we need a
Yeah.
cameraman though. So if anyone could volunteer to
There's a
stream
lot of
live.
people who will volunteer here. Just grab anybody
I
from
volunteer
outside.
my husband. I volunteer Ryan.
Ryan has already been volunteered. Thank you, Ryan. Anyway, so as I was saying, we are going to talk about tax basics today, guys, and we have plenty of stuff lined up for you. Me, Kay, and Anna, we're gonna be here for a whole hour, probably more, just like in other shows. And yep, I guess it's time to start again. Disclaimer: we are not CPAs, we are not tax preparers. I was just responding to a message from our show last week, and the message was, are you licensed as an insurance agent? But we've already explained that in the show last week. I
Mm,
said I'm not selling an insurance. So, you know what I mean? It doesn't mean that we could not be informed consumers. You know what I mean? Even if we're not licensed. And again, what we're talking about in DNP Unlocked is in the eye and the perspective of a nurse. All right. So we're going to talk
mhm,
about it as a nurse doing taxes, as a nurse being presented this financial services and all that. But again, we're not providing professional services. Always best to consult your professionals. And that's a disclaimer at the beginning and end of the show. We are not going to be liable for your decisions. And again, this show is purely commentary. We are providing facts as we go. But again, you have to decide for your own financial
mhm.
um, decisions. Anyway, are you guys ready for tax basics? Guys, please tag your friends and share this to your timeline. We would appreciate that so we can reach out to more nurses.
I just want to say hi from our viewer. We have someone from Carla.
Philippines.
Hello from Carla. Yes, Carla, Philippines. Well, I'm
Yes,
from Carla.
there you go. Tell us, guys, where you're coming from so we can do a shout out of you here in our show. But what's our first topic for today, Anna and Kay? I forgot
Well,
our flow again. I need coffee.
no, I have it. I have it here. Right now, we're
There,
gonna go the. Our first topic is filing status and income reporting.
yeah. Our moderator already flashed it. Thank you so much for the cue. I'm sometimes lost. Anyway, so I think this is for me.
That's for
All right.
you, Sir Paul. Take it away.
Alrighty. So, okay, we're gonna talk about filing status and income reporting. So, for filing status, guys, we have three major filing status. The first one is single. So, if you're not married and you're filing by yourself, then you are considered single. So, if you're not married, if you're divorced, if you're legally separated, then you are considered single. Then we also have another filing status called married filing jointly. Married filing jointly are those married people that are filing together to combine their income. And there's another one that we call married filing separately. Married filing separately. Um, one second. Okay, good. Okay. Married filing separately are those individuals that are married, but they are not filing together. So sometimes people would do this for, um, for certain credits or to lower the income bracket or probably to lower their overall taxes. So that's another one, married filing separately. And the last one, or another one that I want to talk about is head of household. And this is where we get a lot of questions in the past when I did my show in the past. Head of household is you can claim this if you are um, paying for your dependents. For example, your parents, your kids, and you pay for everything that they need, their housing, their school, or whatnot, then you are considered head of household. And these different categories, of course, would have different filing tax brackets. And the main reason why we're talking about this is so you can decide what type of filing status you're going to be, again, depending on your financial status. And then you can figure out the tax bracket from there, which we're going to show later. And that's it. So we have you're married, you're single, and you're head of household. So to compare that, let's show the 2023 tax bracket for the US. And this is from the IRS. All right. And so based on the International Revenue Services, for example, it's okay. We can flash it. Yeah, there you go. All right. There you go. Okay. So my camera is a little off to the left. Based on the IRS, we can do the one that's on the side for our moderator. That way we're not moving around. All three of us. There you go. So they can see. There you go. So for IRS tax filing, if you guys can see, for example, for single for single filers, right? You are in the first 10% tax bracket if your income is from 0 to 11,000 in a year, and I don't think nurses fall on this category. I mean, again, we're talking about the nurses' perspective, right? I think nurses do more than that. So please do not consider yourself to be in the 10% tax brackets to manage expectations. But on the other hand, if you're married filing jointly, then you're going to be on the 10% up to $22,000. But keep in mind that this is combined income. If you plan to be filing separately and you're married, then you're going to have to do the single category. And then if you're head of household, it's a little higher than single. So some people would like to file this if, for example, they're divorced and they have kids or they have parents with them in the US. This does not apply to me, Anna. I asked my tax preparer before. I was asking if I can file head of household because I'm paying for my mom in the Philippines. But she does not have a social security number. She does not have a tax number, and she's not a U.S. person, so that does not count. Again, they have to be U.S. person, which means they have to be U.S. resident, green card holders, or stuff like that. Again, consult your tax preparer. But it puts you in a little higher tax bracket, which means you're 10% up to 15,700. So if you look at the tax bracket, guys, we follow a progressive tax system in the U.S., which means, for example, if if Anna is in 32%, which I think she is, I'm not saying she is.
She's on
For example,
37%.
37%. Woohoo!
Hey,
Okay,
hey,
upper
not about me.
1%,
All of us. All of us.
upper 1% of the society. All right. So, for example, Anna is in 37%. She doesn't pay 37% for the whole income. All right. It's progressive, which means if she's filing joint with her husband, the first 22,000 of the income she pays 10%. The second 22,000 to 89,000, or I'm sorry, I'm using my phone, so it's a little small. I have to bring my face closer to the screen. She pays 12%. And then the 89,000 to 190,000, she pays 22%. You get my point. So tax preparation is a little complicated, but if for me, if your tax what's this if your tax situation is simple to where you only have one job, one W2 or full-time employee job, and your employer is deducting taxes anyway, I think your tax situation is fairly easy. And there are many free tax preparation services. IRS has their own tools that can be used if you are at a certain tax level. I think, if I'm not mistaken, 140,000. Please correct me if I'm wrong, but it's free. And all you got to do is plug in those numbers, click your certain tax situation, and those programs or softwares can prepare your taxes for you. But then again, you still need to review it. When my tax preparer does it for me, my tax is like 30, 40 pages. But I like to still go line by line. And every time they prepare it, we don't file it right away. I would still have questions. Okay, on Schedule D, for example, line number 10, what is this value? I need to know. Why do I need to know that? Because if IRS, knock on wood, IRS, please don't get after me. If IRS audits me, and it happens to a lot of people, I need to know what's happening too. I could not say, my tax preparer did it for me, so ask him, right? But that's not only that. I also want to know, that way I know how to defend myself, because at the end of the day, it's my finances, it's my responsibility. But certain things like that, and mine is a little complicated because, of course, I have businesses and I did travel nursing and I have two W2 jobs ending in 2022, so something like that. But
Too many income,
it's
Paul. Rich people problem.
All
no, no,
have
no.
five W2.
Yeah, maybe
No, I
six.
do not.
Being a dad
So
is part.
the just telling you how complicated it is to look after all of them. But I'm doing it line by line. So be vigilant. What I like to tell nurses is, as the years progress, and keep track of your taxes. And I mean, Kay and Anna have been talking about this in their social media too. Check your year-to-date deductions from your paycheck. Start writing. If you have businesses, then it's a little more complicated because you're going to start writing your income and expenses and filing them. So basically, tax planning is key, and you gotta be on top of it. All right, especially if you're new in the U.S. or this is your first nursing job. Some Americans that are new nurses might benefit from this because they used to do like jobs that are part-times or stuff like that, and they're probably in the 10-12%. Suddenly they take a nursing job and now they're up to 32%, so it's a big jump from, yes, you're earning much, but now you're in a bigger tax bracket, and there are ways, credits and deductions that can lower you. Sometimes you are, for example, you're earning single and you're earning 184,000 and you're in 32%, but 184 is your gross income. And Kay is going to talk about deductions later. What if we can reduce that with legal tax deductions and credits? And now instead of being in 32%, you are now in 24%, right? So that's why tax planning is key. As the months roll from day to day, from month to month, you got to be able to plan because you don't know if you're going up to too much in the tax bracket and you're paying too much taxes when you could just be putting it in your 401k or stuff like that. So that's it. And of course, income reporting. If you're W2, W2 means full time, and this is not including the contractors that are earning 1099. Your employer is reporting your income every month. All right, that's federal law, and you can see it in your paycheck. They're deducting year to date, so the income is being reported as you move along. If you're W2, if you're self-employed 1099, for example, 1099 employee, which means contractor, right? You have to report your own income, write your own deductions, and pay your own taxes. All right. So that's the way to report it. And then, of course, business is a little more complicated because I have estimated taxes, quarterly estimated taxes, and then yearly taxes and all that. But for the most part, majority of nurses are W2. Your income is being reported as your paycheck rolls in. So, but best to check that it is actually computed correctly, all right? Because sometimes those softwares, again, because payrolls are now being prepared by softwares, right? They are being prepared by computers. So sometimes they can deduct too much or too little. It is still your responsibility because it's your paycheck. I've seen so many nurses that are not even bothering to check their paycheck. I think that's not a good habit. I think it is a good habit to check every time as soon as your paycheck comes in. Check on it, see if there's inaccuracies as far as your taxes are involved, your contributions, your actual hours, and your gross income, to always verify if they're accurate. That way you don't have to like look at 26 paychecks at the end of the year. All right. So best to do that as the paycheck comes in. And that's it. Back to you, Anna and Kay.
Yeah, I want to add something with Paul's message. To check your paycheck. We have. It's so funny because he mentioned, that you need. Sometimes you'll be below 10%. True. Some people who will arrive here late in the year, like you're gonna arrive in the United States and you're gonna start earning December or January. I mean, sorry, December or November. If you're coming towards late end of the year, so you might be falling on that 10% because your income will just be calculated from that 2 months of salary. So when I arrive here in the United States, and if I work directly after arrival on December, and my salary is not even more than 10,000 for 1 month, then it's a possibility that my taxes that time will be 10%. So let's say November, December, I work for 2 months only, and I accumulated less than 10,000, and I have dependents. Okay, so so there's also going to be tax deductions on that for the 2 months of my work, and I might be falling on that 10%. So that is true. So if you are coming towards the end of the year, and you have a overtime opportunity, I would recommend you, yes, take some overtime. Don't listen to other people saying, oh, don't do overtime, it's just going to go to your taxes. So no, because when you come towards the end of the year, your salary will just, or your taxation will just be based on the months, or the months of the remaining year that you've worked. Okay, so it's not like you've earned a lot so much, even though your annual salary and your paycheck and your or immigration documents says 70,000, but you only work for 2 months. So you're not earning 70,000 in a year. You're in the lower bracket. So that's one. And second thing I want to pay attention to people is when you arrive here in the United States and you don't see a deduction, any deduction on your paycheck, no taxes, no insurance, call directly your employer directly. HR, call HR, call payroll. Why is there no salary deduction? There's two reasons why there will be no deduction. Number one is maybe they forget. Or number two, they classified you as 1099. So this is something you have to pay attention. We have a lot of nurses or new immigrants coming to the United States petitioned as a W-2 non-exempt employees. When they come here in the United States, they're converted to 1099. That is illegal. Please pay attention to this. You are not to arrive in the United States to be converted as a 1099. 1099 means that you are not an employee of that company. Mind you, you came here in the United States, you're being petitioned, and it's clear on your immigration documents that you are an employee of that employer who sponsored you. So please be aware that changing you to a 1099 upon arrival is a breach of contract. Big possibility that your employer is breaching your contract, because if all the immigration documents, if all the job offer states that you are an employee, then you should be receiving employee benefits, health insurances, coverages. Taxes will be between, the taxes, FICA or payroll taxes will be distributed among both of you and your employer. So that's around 15%. If you are an employee, you're paying around half of that 15% of taxation of payroll taxes. Payroll taxes is what you see in your paycheck that says FICA, Medicare, um, Social Security. Those are your FICA. So it's half of that will be paid by you, and half will be paid by employer. But if your employer is tricking you and changing you to 1099, it means they're running away from the responsibility to pay those payroll taxes. You are going to be paying that, about 15% full, not them, just you fully. So, and also it's breaking the immigration promise that they will be your employer. Because if you are as a 1099 working here in the United States, but then you were promised as an employee, so that's something that you want to talk to with a lawyer, because your employer might be breaching your contract. So please, if you still don't see any deductions on your paycheck, please talk to a lawyer and consult, because your employer might be breaching that or changing your employment terms.
Sounds good. Yep. So, yeah, like Kay said, again, if you come here in the middle of the year or towards the end of the year, then definitely you'll be in the lower tax bracket, because, again, it's still based on your gross income. And yes, I agree with Kay with the 1099 stuff. We've heard about this, Kay and Anna. We've talked about this in length before. Uh, I can't believe that people or agencies, organizations would do that. That's definitely a huge, huge red flag
Mhm.
if they are hiring you and asking you to work 36 to 40 hours a week, checking your time, telling you what to do, giving you tools of how to work, such as your work computer and all that, and how to time and time out. Guys, those three or four categories alone that I've said already tells you that you're a W-2 employee and not a 1099 employee. So be very careful if your time is being monitored, if your productivity is being monitored, if they're giving you tools to properly conduct your job, which is how to be a nurse, which is your computer and all that, then you're not a 1099. You are a W-2. 1099 are for independent contractors, don't need supervision, don't need time checks and all that. So please, please consult your um, tax providers for preparers, and also advocate for yourselves, guys. Do not let people or organizations run over you. The most vulnerable groups of nurses here in the US are the immigrants, because at the
Mhm.
beginning we don't know any better, but it is very, very good to do your research, advocate for yourself. And that's why we're doing the DNP Unlocked, because we talk about uncomfortable things that nurses go through that nobody wants to talk about. This is why we're talking about this. This is not um, story that we just heard from someone. This is a real story we've heard from actual nurses who had to go through this, and we're using it as an example because it actually happened to many nurses. I thought they said my audio is static or something.
Yeah,
I don't know.
yeah, you're going to puberty again, Paul.
I don't know. There's always something wrong. I keep using different things. I have to check on this.
Okay, so what our next topic is the tax deduction and the tax credit. So those are two different things. When you say tax deduction, these are the, let's say I my gross income will be 100,000. Okay, so there are tax deductions called one example is the standardized tax deduction. It's, how to explain this in a layman's term. Standardized deduction is saying to Uncle Sam, hey Uncle Sam, I worked a full year and I earned $100,000. But Uncle Sam, can you be forgiving of my taxes because I have kids, I have like I have so much expenses that I need to incur for myself. I spend for my um, electricity, I spend for clothing, I pay sales tax there, here and there. I spend. Okay, so Uncle Sam will tell you, hey, okay, I think you're spending and you are helping the our economy by being a consumer, right? Because you're helping the small businesses and the businesses in the US. So I'm gonna give you a forgiveness of this. Okay, so it's called standardized deduction. Standardized deduction is Uncle Sam telling you, you don't need to write down all your expenses, but I will just give you this amount of money that I mean I'm not gonna give you amount of money. I'm gonna reduce your tax um your taxation by giving you tax deduction. And let's say for me and my husband, we're both married, filing joint. We have kids, and our standardized deduction, I believe that's around 20 something thousand. Don't quote me on this because those numbers, exact numbers are not in my head. Okay, but going because this change every year. 2023 is standardized deduction. It's different from 2022, 21, 2020, 2019. So I've been here in the United States for almost 18 years. So these numbers don't get stuck in my head, but I can give you like about round estimate. So let's say that standardized deduction is 20,000 this year, okay? And I earned 100,000. So I'm just rounding off to make it easy for you. So that 20,000 will be deducted from my gross income of 100,000. So now Uncle Sam will say, okay, Kay, we're just gonna tax you based from 80,000. Okay, so now what I'm gonna do is I'm gonna look at that bracket that Paul shared earlier, and Uncle Sam will start taxing me based from that tax bracket and based from that 80,000. Okay, another example. I'm single and I earn 100,000 this year. So what Uncle Sam will do is if I file for standardized deduction, I'm going to reduce that about 10,000 to say standardized deduction based on, from the 100. So that's 90,000. So Uncle Sam will only see that I will be taxed based on 90,000 income. Okay. Now, what's the difference between standardized deduction and tax credit? Standardized deduction is just reducing your gross income to a lesser taxable income. Okay, but you have to go through that bracket. Okay, the difference of tax credit is this: Uncle Sam, I earned 100,000 this year. Okay, and Uncle Sam will tax me based from the 100,000. If let's say my tax bracket is 10%, which means Uncle Sam, I have to pay taxes 10,000 this year. I earn 100,000 and based from my CPA I have to pay 10,000. That's my federal tax. And Uncle Sam will say, "Hey Kay, you bought an EV car, you bought an electric vehicle, you bought a Tesla. We give tax credit this year of 10,000." So my CPA will file that as tax credit, which means that 10,000 that I will owe Uncle Sam will not be there anymore because he gave me a 10,000 tax credit. Tax credit has bigger impact because it impacts you directly. Whatever amount you see is the exact money that will be credited from your tax dues. So again, let's say I made 200,000 this year, and according to my tax bracket, let's say I'm just 10%. I'm just doing random numbers to make it easy for you and simplified numbers. So if I earn 200, and my taxation is 10%. So that's around 20,000 that I owe Uncle Sam. I bought an EV vehicle, and the tax credit is 10,000. So 20,000 minus 10K, then 10K tax credit. So now I owe Uncle Sam 10,000. So I know there's a lot of numbers involved in taxation. Unfortunately, there's no easy way to make it easier, but we can make it simple and easy to understand. But taxation, for you to understand, you definitely need to understand math. And I know a lot of nurses went to nursing because they hate math, or they fail math, or they're just not excelling in math. Unfortunately, we have to deal with that whether we like it or not, because we pay huge amount of money to taxes. And if you're not taking advantage of this tax credit, tax deductions, you are missing a lot. So a lot of people come to me, hey, I don't want to buy a Tesla because it's expensive. But then the only reason for me why I would buy that is, number one, there's a federal tax credit, and there's also a state tax credit. If that Tesla is costing me 40,000, by the way, I'm not endorsing you guys to buy Tesla here, but I'm just giving you an example why that there are situations like this that the government will give you tax credit, and you have to pay attention and talk to your CPA. Okay. Um, so this year, um, the federal government said we're gonna give you tax credit. I think that was around 10,000, right? And then the state, which is separate from the federal, will also give us a $4,000 tax credit. So if I add that both tax credit, we're talking about $14,000 tax credit. If I buy that Tesla for 40,000 and Uncle Sam will give me a tax credit of 14,000, so you're talking about that Tesla would probably now be out of my pocket of 26,000. And nobody really pay attention to this because it's complicated. But if you try to learn the most basic, you are really saving a lot. Imagine that 14,000, you don't earn that in 1 month as a nurse. You don't earn that um, you don't earn that $14,000 right away savings in your 2 month savings. So there's a lot of things that you might want to ask when you talk to your CPAs or tax preparer um, before you start your work. Consider talking and asking them what are the available tax credits, available tax deductions for me. Okay, so this is something that you want to consider talking. So again, tax deduction is not as impactful as a tax credit. Tax credit is 1 to 1. If the Uncle Sam will tell you $10,000 tax credit, it means that he's reducing your taxes to 10,000. Now, let's say you're a single mom with 4 kids, and your income is just around 60,000, right? And your tax bracket is low, and you have a lot of dependents. So, each dependent comes with a tax deduction as well. I, and I think for the adults, for like example, I filed my mom as a dependent before, so she was my deduction as an adult dependent. So I believe we were doing $500 a year tax deduction for that. And then there's also called child tax credit every year. So there is a dependent tax deduction, and there's also on top of it a child tax credit. So those are the things that you want to talk with your CPA or financial tax preparer, professional tax preparer, because you'll be able to realize that sometimes, because there's so many tax deduction, you're a single earner with lower income, you're not doing 6 digit income, you might have refunds, right? So imagine having in your extra pocket at the end of the year because you didn't realize that you have so much tax deduction credits and you're on the lower salary, less than $100,000, and your tax bracket's low. So those are the things that you will get refunded at the end of the year. Okay, so consult your CPA.
Okay, next point. May I also add about the tax credit? If you bought a house, I just bought a house, right? So you can also claim for that and include it in your tax application. That I am learning, another tax to learn.
Yeah, so yeah, the house, when you buy a house in the United States, there's so many tax deduction, tax credit. For
Mm-hmm.
example,
Points. When you buy
I bought my
points,
house.
there's a tax
Yeah.
Mm-hmm.
deduction.
Yeah, so when I bought my house and I know I was going to plan to sell it later on, alright, so what I did was I did not become stingy anymore when I learned about tax deductions when you buy a house, because when you buy a house and improve the house,
Mm-hmm.
it's a major repair, major renovation, major upgrade. Not like, okay, I put a curtain rod. Or not like that. When you say, oh, I'm adding a deck to my house, so it add
Yeah.
value to the house. I'm not
Yeah,
being
solar
stingy.
panel.
Yeah, so those are not, I'm not, then I learned about taxation. Before I would be very stingy about repairing or upgrading the house, but now I'm not stingy about it because I know all I have to
Mm-hmm.
do is save all those receipts that I have, and when I sell the house, all those will be tax deductibles. So everything that I use to repair or upgrade, sorry, or upgrade my house, major upgrade renovation that brings value to the house, then I can use it as a tax deduction. So it's very good because not only that you actually put the value up higher to your house, but
Mm-hmm.
also you get tax deduction. So higher income, reduce your taxation. And that's how you earn wealth in the United States.
Right. And of course, when having a house, you have a lot of tax deduction as well. Your interests, your PMIs, those go
Mm-hmm.
out of your taxes as well. So many tax deductions, your child credits, and all that. So explore those different tax deductions. Work with your tax preparer to figure that out. And again, just like anything that we always say, shop around. One tax preparer may not work for you, check another person and another person. But yes, so there are ways to lower the gross income very in a very legal manner. And of course, if you have businesses, then you can start writing out expenses related to business as well, such as
Yeah.
this extra phone that I'm using for work. I have my main phone here and I have another iPhone that I use for work. Well, that's for work. So that's tax deduction for work, something like that. Examples of how you can lower your gross income. The goal is to lower the gross income because the higher the gross income, the higher the taxes, right?
So if you guys filed your taxes already last year, 2021, 2022, look into your filing of taxation. You will see the amount on the top will be your gross payment, on the top part of your payment. But when you go actually on the lower pages, look on the specific where it says modified adjusted gross income or adjusted gross income. That is your word of MAGI. Okay, MAGI, MAGI, which means that is where Uncle Sam actually will base his taxation.
That's your
Okay,
taxable income.
not
Yep.
not your gross.
Not the
Okay, so
gross.
even
Yeah.
if I'm earning 200,000, if I don't fall into that second tax bracket because my CPA was good enough to reduce all my taxes, I mean my gross income to lower, my Maggie can only be, let's just say, 130,000. Even though my gross income is 200, if my Maggie is 120,000, that's the only amount that Uncle Sam will tax. Okay, not
Yeah.
your gross, never your gross. All right, so it's always gonna be the Maggie, and they will say, "Oh, I earned this amount of money, and I'm on the 32% bracket." No, you have to look at your Maggie. Will fall on the if your Maggie will fall on the 24, then you are taxed on the 24, not on the 30, higher tax bracket. If you also pay attention to Paul's tax bracket earlier, you will see like 10%, 12%, and then after that, next is 22%. So you will see that the big jump
Yeah.
of 10 to 12 and then 20, then 12 to 22, 10%. So if you go above the next bracket of 2%,
It's a
that's
lot.
fine. That's fine. But if you go next bracket and you're going to be 10% next, so those are the things that they will say, oh, don't do a lot of overtime. You're going to go to the next bracket.
Let's show that
No.
again because you can
Yeah.
also see. Let's show that tax bracket again because you can also see from 24 you jump to 32%. That's the
Yes.
2017 tax law that was changed. Because look at the
Yes.
brutal jump, like almost 10% up every layer. So imagine a nurse who was just being a single nurse doing his nursing thing suddenly started travel nursing, and boom, overnight you become 24 to 32. During COVID, nurses went from 24% to 37% during the COVID because they're paying nurses so much money. But if you're not used to that tax bracket, then you might be losing out on some of the deductions. And you might be, I mean, we're not saying for you to like lower your taxes illegally. There are legal ways to lower that down. Not only tax deductions and tax credits. Maybe you can put more money to your 401k and max it out 20,000. That will also lower your MAGI. All right. So very important to take note of these things, nurses, and be aware of your own tax documents, your tax status, your tax filing. Always look. Like with me, every month I'm looking, and am I jumping to the next tax bracket, because I would have to carefully um, prepare for that, right? Otherwise, it might cost me more paying in taxes versus if I had just put it in my 401k and maxed out my Roth IRA and other deductible expenses.
Yeah, so you will pay attention that the 10, the 12, and then all of a sudden 22, and then 24, and then all of a sudden jump to 32%. So there's big jumps. I mean jumps in this bracket. So to lower your to lower your tax bracket, let's say my gross income based on my immigration document, it says here 90,000. So okay, if I'm married filing joint, does it mean that I'm on the 22% tax bracket? Okay. So the answer, my 100% answer most likely will not fall on the 22% tax bracket. Because if you are filing joint and your annual income based from your immigration document says 90,000, you still have to deduct the standardized deduction there of around, if you have kids, dependents, and if your standardized deduction is 20,000 plus, then your Maggie will probably fall on around 70,000. So you're gonna be on the 12%. A lot of nurses who come in the United States who don't do a lot of overtime and single earner are mostly falling on the what do you call this one, on the 12 to 22%. Okay, so please pay attention. There are a lot of things to lower your taxes, and it's legal. There's a big book. It's all called, you know, all the legal ways to reduce your taxes. There's 100. There's 10,000 ways to do it. But the most common one are 401k. When you arrive here, take advantage of that. 401k, 403. We all discussed this during our retirement information. If I'm planning to study later on, advance my nursing degree career, or I have kids, then my 529 plans, college plans, might be very helpful. HSA is there, health savings account. It can reduce your taxable income if you have business, right? So again, please take advantage of that before you start working. Please learn all the tax advantage that you can take. I mean, tax deductions or credits that you can take advantage of. Next topic.
Oh, before we go to my next topic, let's go say hi to Marvin, one of the admins of the forum. Hello, Marvin, we miss you.
Hi,
You need to
Marvin.
you need to join us in our show sometime, but you're busy either working or traveling, Marvin.
Yeah, Marvin the Goro Explorer.
Yeah,
Marvin the
and
Explorer.
that Antoinette in the comments asked if you get overtime taxes. Yes. So Antoinette, everything that you earn here in the United States is
Mm.
taxable. All right. Now,
Yes,
if you
every
file
single
for
cent must need it
yes,
needs to be declared. So yes, ma'am.
if you are dual citizen and you have income outside United States, yes, you will have to declare it too. Welcome to the United States. So you have to declare those two. But let's say some
Yeah.
income you don't get taxed, okay? But there's specific income. People earning less than $600 a year, they don't need to file those taxes. They don't even need to pay it. Okay. But if you're earning like, let's say, $5,000, right? $5,000, and you have dependents, right? Imagine 5,000 a year. You're
A
actually on
year. We're
the
not talking about monthly, okay?
yeah, a year.
Mhm.
You're way below the minimum income, right?
Which
You
is
might not pay
11,000.
taxes. Okay, you might not pay taxes, but you still have to declare it. So you have to do two things there. Is it tax declarable, or is it declarable, or do you have to pay taxes? If less than $600 that you earn in the year, you don't have to file it. Okay, but if you earn more than that, you have to file it still. Even though you don't
Right.
have to pay taxes on it, you still have to file it. So the best is gather all your income. All personal income is subject to income tax. Okay,
Mhm.
all gains on the investment is subject to income tax as well. I mean, gains, capital gains taxes. So different
All
bracket. If I
income.
sell my house, yeah, if I'm on the 22% bracket right now, and if I sell my house, but my house is my long-term investment, I own it for more than 5 years, and I lived in it more than 2 years, even if I'm renting it out, um, the last 2 years of my ownership. When I sell it, all of those income will be subjected to taxation. But is it 22%? The answer is no. Long-term investment gains are not taxed 22%, not taxed as your personal income. So there
It's
is
a
a
different
separate
tax
tax bracket.
category. Yeah. Hmm.
Yeah, so there's a different tax bracket. So that's why it's very best to do long-term investment because your taxation will be less.
Right. And long term, it's more than 1 year. So if you're doing those cryptos and you're changing it right away the next day, that's taxable income. To cut it short, guys, every single money you earn in the US, whether it's paid by your employer or you got it from a bank bonus or
Mhm.
somebody paid you for your services in cash, technically and legally speaking, you have to pay for
Wait.
income taxes for those. Uncle Sam would always want to have a piece of the cake,
Mhm.
so please keep that in mind.
Exactly. So
My
now we're
man,
going to talk about the documentation needed. Okay, so 8 years ago when I arrived and we're about to file for taxes, I got overwhelmed because, as you know, I'm a planner junkie, I'm a binder junkie, but I really know that I have to prepare and sort out those paperwork. So, for documentation, first of all, you have to prepare personal information. If you're single, it's only you. Identification, social security, state ID. But if you have a family, you're married, or you have 5 kids, you have to consider of that. So as early as now, season began sa January, but as early as now, prepare for this documentation so you have enough time to sort things out. Like what I said, number one, personal information, your state ID, your social security, and any supporting documents like your green card, just to have it on the side, your passport. So if you go for your tax preparer, you're complete and you're not gonna come back again the next day and have an appointment. And second, proof of income, like Dr. Nurse Paul said in pay, every income must be accounted for, nothing is free. Okay, make sure that you have your W-2. What is W-2? So let me read. It's a wage and tax statement, a document an employer required to send. You will receive it via mail from your employee. Even if you only work there for a month or 2 weeks, you will receive it. Now, if you're a traveler like me, last year I received I-6 um, W-2. So you have to wait for all of those before you file. Make sure you have everything lined up. And since my husband is also a traveler, so I also have to wait for his W-2. It's a document an employer required to send to each employee at the end of the year. Like what I said, even if you only work for a certain hospital or company for a week or a month, you will have a W-2. And number three, other documents like paycheck. you can claim or ask credit for your claims, right? If you put your claims in a daycare center, or if you have a babysitter. When my daughter was young, like 5, 6, 7, 8 year old, I have 2 babysitters. After I go background check program, I asked for the social security because I have to put that in my claim. And now that we just recently bought a house, another form for that, and it's called now I lost my
Your note.
my note for that. But you're gonna have a form IT21 That's what you call it, claim for real property tax, whatever upgrade or renovation that you do to your house. Have it lined up too. And other deductions that claim and the case said, make sure you have the paper copy and scan it, put it in a one file. It will save you time. Because before you know it, January is approaching and April is approaching. April 15 is the tax day. And you can apply for an extension for 6 months. But you don't want to rush into that. And a lot of tax company or CPA are always busy or booked up. So it's better to prepare early as long as you got or receive all your W2 forms. Like what I do is I make a folder for each one of us, me, myself, my daughter, and my husband, whatever babysitter's information. It's all about communication with them and preparation. Okay, now if you have health issues, you have health receipts like I do, make sure you also have a copy of that. You can claim that. If you're getting your health insurance, not from your company or from hospital, from a marketplace, you also have a form for that, and you can file for it and secure a copy. Like what I said earlier, the gains, if you have investment, you have form for it. I note of that, make a copy before January start, make sure you have them, check them, the information. So when you go to the tax preparer, they're all complete. Now, I already said about the deadlines, April 15, but you can extend 6 more months. Now, penalties. Of course, there are penalties. There's no free in the US. If you are failure to file penalty, you have to pay for it. A late payment. If you file your tax late, you also have a penalty for it. Now, how much? It really depends. If you owe the IRS, we have to pay for it. Now, mama, I owe like a huge amount. Can I pay it by installment or payment plan? Yes, one of my friends did that and I helped her out. It's a monthly deduction, but of course there will be tax from it too. And if you pay the penalty, another penalty, and you will go early for your RIA or your retirement, you also have a penalty for that. So take note of those, make notes, and write the dates and information so it will be easier for you when the time comes to file for your tax. And that's it for me. I'm sorry about my vlog.
All right.
Any additional that I missed?
For us,
Hold on.
we file late, okay? Because majority of the business people, we are not ready to file it on April 15.
April
Okay,
15,
so a
correct.
lot of business people, contractors, we file for extension. So then our extension becomes October 15 will be our deadline, right? So that's okay.
You still have to pay for your estimated taxes, but we don't
Yeah.
close
So
our
yeah,
books till like October because
yes,
it's a lot of
yes, correct.
paperwork.
So we're W2 income, and also we have business and investment. Majority of our income, let's say example, if majority of my income for this year or for the previous year was my W2 income, W2 means my employer deducts taxes already on my paycheck. There was a question actually in the chat, so I'm gonna deal with it with this answer. Okay. What's her name? Sorry. Ria Ann has a question about payroll taxes. Okay, so payroll taxes. This is being deducted already from your paycheck. You will see this again as a FICA, Medicare. Okay, so it means every paycheck my employer already remits that portion of taxes to Uncle Sam. Okay, so I've already submitted portion of my income taxes. All right, so what is the problem when you file extension and you're not remitting enough? Okay, let's say you have a lot of, when you file your taxation, there's a lot of deductions, okay? Or you're actually withholding not enough per paycheck. At the end of the year, by April 15, I'm expecting to pay. All right, let's say I have to pay $20,000. Okay, what if I file for extension to October 15? And I know I under withheld my taxation, which means I know I will owe Uncle Sam at the end of the year, and yet I extended my filing to October 15. What will happen to that? That is, that is not good, because now if you owe money 20,000, now you'll be subjected to 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 interest. Okay? So interest is no joke. I've seen I have been fined interest and penalty in Connecticut, because when I was a traveling nurse in Connecticut, eventually became a resident of Connecticut. I did not know that I have to pay taxes to my car. Just owning a car, I need to pay taxes. And I know in majority of United States, I have to pay taxes in the real estate. If I own a house, I have to pay real estate taxes, property taxes. But I did not know that I have to pay car taxes. I'm like, what is this? Will I be paying taxes in everything I own in Connecticut? Well, how about my shoes? Will I be paying taxes every year for owning nice branded shoes, right? So that's my question. So what is wrong with filing late is, if you know you're going to owe, I recommend you filing it on time. Okay? Filing it on time. If you cannot file it on time, there is a form you can go to IRS and you can remit. No, if I'm thinking, I think I'm going to owe Uncle Sam $20,000 end of the year, because I under withheld, I did a lot of overtime, I made so much money in my investment, my daily trade in the stock market. I think I might owe Uncle Sam 20,000 at the end of the year. Okay, so what you will do is, if you cannot file it by April 15, there is a form online where you can remit electronically to Uncle Sam. Go to IRS and put there manually remit. What I will do is, I'm not ready to file, but I know I owe Uncle Sam 20K. So what I will do is, I will send Uncle Sam 20,000 for now. All right. So I'll send Uncle Sam, this is my 20,000, but I will file on October 15. Okay, so Uncle Sam will not charge you interest anymore on that amount. Okay, so there's a difference. If you owe Uncle Sam and you will file late, then you will have to pay interests. Okay, but if you don't owe Uncle Sam and you know you're going to get a refund, according to your CPA, you might be getting refund. Okay, and you're filing late. That's fine. All right, that's fine. You're not going to accrue interest. But if you're filing late and you know you owe, then interest will hit you. And interest is not 1%, not 2%. Okay, it's a lot. So might as well, it's probably more than your mortgage rate. So I recommend filing on time if you will not, if you're not expecting a refund. Okay. So that's what you will have to remember when you file late.
Okay, may I add, I forgot to include earlier, aside from your personal information, proof of income, and other form, don't forget to include your bank information, the routing number, because if you're gonna receive a refund, they will deposit it directly to that. So don't forget that bank information. Make sure it's current and updated, okay?
Yeah.
Yes. If you're filing
And
standardized deduction, sorry, Paul, I just want to add standardized deduction when I mentioned earlier. You don't need to save receipts. Okay, you don't need.
Mm-hmm.
If you are sticking with a standardized deduction, but if you're not standardized deduction, you're itemizing everything, like Anna
Mm-hmm.
mentioned earlier. This year, I went to the hospital. I got sick. I accumulated like $30,000 worth of bill from the hospital that I have to pay. This can be itemized. Okay,
Mm-hmm.
so don't stick with a 20,000 plus standardized deduction. If you have expenses, medical expenses that are way above the standardized deduction, I recommend you talking to your CPA because it might be best for you to itemize. If you're incurring business expenses of 50,000 losses or whatever expenses that you incurred, do itemize. I recommend you itemizing if it's way beyond the standardized deduction. So you don't lose. So that's what Anna said. All your doctor's visit, save all the receipts.
Mm-hmm.
Right? So what else? All your tuition fee that you paid for. All right.
Mm-hmm.
Children's expenses, babysitter, like Anna mentioned.
Yeah.
Babysitter, you cannot just hire your mom and say she's my babysitter, okay? And then I'm paying her cash and then claim her as a babysitting
Mm-hmm.
expenses. No, you cannot do that. So what you will have to do is if you're gonna pay your own family, make sure that they file this as their income tax.
Taxes.
Get their name, get their address, get their social security number. Okay,
Mm-hmm.
because when you file for babysitting, you will need those information, their name, their social security, their address, their date. Because if ever you get audited, Uncle Sam will ask, who did you pay for babysitter? Are they legitimate people? Are they
Yeah.
filing for taxes? So not just random babysitter. Oh, I'm paying my eldest daughter as my babysitter.
Yeah. And
No.
always, yeah. And always, sorry, Kay, I need to add that everything that you declare for IRS must have
Mm-hmm.
paper trail, must have documents.
Yeah.
So, for example, you want to pay your babysitter. I would rather have it go through the bank. That way, it's
Yeah.
stamped on my bank account. I never transfer cash or something like that. That way, if I claim them as deductions and they tell me, "Oh, you never gave me that money," I'm sorry, we have a paper trail. So just like
Mm-hmm.
in nursing, we want everything documented. Like for example, with me, I separate my business expenses from my personal, and every business expenses gets taken out of the business bank account. The purpose is for documentation. That way, it's much easier to fix your books. And also, if IRS wants to look at it, I'll be saying it's a legitimate business expenses. This went through this person. And if you're not sure, you can ask the other person why they didn't file taxes for it. But
Yep.
as for
Mm-hmm.
me, I declared it as an expense for me because I paid this person, something like that. So something like that. And also, it's always best. We've learned this in nursing school, but very applicable to our lives to document everything. You always think that somebody might ask for it down the line. You always got to be ready. So I'm pretty good with my books. I don't have a big bookkeeper. I prepare my books myself, and I want to be involved with that when my tax preparer does it. Put it in the tax forms. The reason being is I want to be able to defend myself if it had to get there. I'm not inviting IRS to do that. Knock on wood, a little IRS. We love you so much. But I'm saying is I want to be ready. All right,
Yeah.
if in case they want to ask questions, and I just want to be informed with everything that's going on with my finances.
Exactly. In the US, you can hide, but you can never run. So they will always track you down.
Uncle, so I'm gonna
Only a
try and
matter of
define.
time. It's only a
Yeah,
matter of time.
we have a question from Maria. I don't know if you guys want to answer this, because I'm not married. But should the couples choose to file taxes jointly or separately? I'll leave it to the married people, married co-hosts.
So I'll answer. So 8 years ago, when we arrived, I filed single because I'm the only one working, and my husband then is not working yet because he doesn't have any NCLEX yet. He was a housebound for a while. So from what I learned before housebound, so from what I learned, if you're a married couple and there's only one income and the other one is like income is higher, so that's what's best. That's what my CPA told me before. But if you're but after the years we switched to filing jointly. We combine our income because I find it easier when it comes to preparing the documents. Because if we're gonna be separated, more work for me since I'm doing all the paperwork. So right now we've been filing together for almost 4 years now. How about you, Kay?
So we actually considered filing separate before, because of
Mhm.
the big difference of our taxation, right?
Yeah.
So if you are in a complicated situation, like for me, I do my own business, I have my own business, I have my W-2, I have subcontracting, and then my salary, my husband's salary is different. Before, there was a big difference. So we were considering filing separately. Okay.
Mhm.
But then when we run it through our tax, a CPA, the CPA said it's still best to file joint. Okay, majority of the
Mhm.
Yeah.
cases,
Mhm.
filing joint is actually more advantageous, okay, than filing
Yeah.
separately. Majority of the cases. So, but there are cases that will be separate, that can be filed separate. No problem with that. I know. Who's that? I think Ellen DeGeneres. I'm not sure if she was filing separately, but one of this big celebrity with a partner as well, with complicated business situation, like high earners. They file separately. I forgot which one is
Yeah.
that. Yeah, but they were there again. We were in that similar situation that filing separately can be an option, but when we run it with the CPA,
Yeah.
we were filing jointly.
Yeah.
Also, before, when I was a single mom, I filed head of household. So I actually, almost check off all the boxes. What did I file single before? Yes. Where was I single? Then when I became a single mom, I filed head of household. Okay, because
Yeah.
I have two dependents that time, my mom and my son. And then got married. We're filing joint. Hopefully I don't
Right.
have to file separately. If
No, I agree with Sheila, one of our viewers, Sheila, our good friend. Sheila said, I agree with her. If there's a confusion between should I file separately or jointly as married, I'm not a married person, but that's how I do it. I'd have my CPA or tax preparer run both. A good tax preparer
yeah,
would actually run both scenarios. My tax preparer is pretty good. It's gonna say, you know what, I think it's better to do it this way than this way because you're gonna get more credits than this, something like that. So scenarios again, the more complicated your taxation, of course, the more you pay to your tax preparer, right? Because you're consuming their time. But I would run both scenarios and see what you're gonna get. And like Kay said, the tax system was built to give you more advantage when you're married. Can we flash the tax bracket real quick one more time, guys? Let me tell you something about the tax system as a single person. All right, the tax system always puts the burden to the single people, where as a single person you get more penalized. All right, the tax system is built for families. If you're single, you pay more. Look at the tax bracket carefully and compare. Say for example, let's go to 22% tax bracket, where if you're married you get more tax deduction until 190,000, right? And for head of household up to 95. But with I guess it's same now, right? But for single it's up to 95 as well. But I think for most scenarios the tax system was built for actually married people to file jointly. But then again, run both scenarios, because Kay said in some cases separately would work, but jointly will also work depending on, the goal is to find out where you're gonna legally get more tax deductions and less taxes to pay in a legal manner. And IRS allows that as long as it's in their rules. The IRS only wants you to play by the rules. If it's in their rules, even if it's a loophole, it's still legal as long as you play by the rules, is what we're saying. All right, and I guess we have another question here. Are payroll taxes different from gross income? Gross income for me is what you earn in a month based on your hours, or what amount of payment you ask for your services if you're a contractor. The payroll taxes are your FICA taxes. There's three: FICA, Social Security, and federal. So everybody,
Medicare, social.
Medicare. Yeah. So I'm sorry. It's Medicare, Social Security, and
Yeah,
for working, not for working. Federal tax.
yeah.
Everybody pays this, regardless if you're W-2, if you're 1099. Everybody pays the payroll taxes. There is no way around it. That's your
Yeah.
participation to the government, if that makes
Yes.
sense. And that does not include state taxes. Thankfully, I don't have those. City
Yeah.
taxes, whatever taxes that your locality can impose to you.
Yeah. So just an additional trivia there. Miss Kay, why is my gross income combined 300,000? Somebody said that. 300,000 was my gross income when we filed taxes. But when I saw the contribution to Social Security was only 160,000. So if you see the progressive tax bracket, you can go all the way, 300 or 500,000 more, and you can be taxed. But Social Security is limited. Social Security can only deduct this amount of money. I think it's 180,000. I totally forgot the number, but it's no more than 200,000. So if you're earning more than 200,000, then you're not charged anymore for Social Security. Anything, any income after that. And how much are we talking about? Social Security, Medicare, that accounts to about 6% of your income tax.
Six
So again,
point, I think
yes,
25.
six
Yeah,
6 point, yeah, 6 point something. Yeah, so it's half
that's
of
if
the
you're
50%.
W-2. For your
Yeah, so W2.
self-employed, it's
Yeah,
double because you also
yeah,
pay the employer portion.
yeah. So always keep that in mind. If you are 100%, or every $100 that you earn, about $6 go to Uncle Sam right away. You cannot escape that. Everybody who earns in the United States, will have to pay those payroll taxes. Medicare. So what is Medicare? If you have somebody elderly who is taking advantage of Medicare, Medicaid, actually you're the one who's paying them. So thank you, all those overtime lovers, for paying my
Yes.
mom's Medicare. Thank you for sponsoring that. Thank you, Paul. Thank you for
Yeah.
sponsoring my mom. High income
Social
earners pay a lot.
Social Security has a max per year. Medicare
Yeah.
doesn't have a max per year. So you pay that
Yeah, no social
1.7.
security on it. Yeah.
Yeah, Social Security has a max where after you reach the max, you don't pay anymore, and they're gonna return your money. That's part of the credit. But so Medicare doesn't have a max. I think you're gonna have to
Yeah,
pay and
no.
pay. Yeah, and somebody
Yes.
asked, "Hey, look, and Anna, if I have two jobs, I'm gonna summarize because I already read it. If I have two jobs, the other one is falling in 10% tax bracket because it's probably lower income, and the other one's 24%. Do I pay 10% or 24%, or do I separate them? No, the answer is it's gross income. You're gonna have to mix them up together. But technically, with the progressive tax bracket, again, you still pay 10% for the first 11 or 12,000, and then progressively going up. So it kind of balances it out. There's no need to separate them.
I'm gonna give you my last tip on how to understand taxation, right? Let's say Paul is the oldest among the three of us, right? Let's say Paul is 30 years
Am
old,
I?
right? Yeah, let's say Paul's 30, he's the oldest, okay? And Anna is 20-year-old, right? And let's say I'm gonna be the one that is 10-year-old, right? So you have 30-year-old, 20-year-old, and a 10-year-old kid. If we get all in trouble in front of our parents, let's say we have a parent, right? And the parent will give us punishment. Do you think I will have equal punishment as Paul, or equal punishment as Anna? The answer is no, because I'm 10-year-old, I'm a minor, right? My parents not gonna punish me. What I'm saying here is, let's say the parent will say, I will punish you, three of you. I will give Paul three punishment. I will give Anna two punishment, and I will give Kay one punishment. Okay. So it means that if you add that, three plus two plus one punishment, so that's a total of six punishment. Okay. So we average it as total of six punishment among the three of us. Now, if we divide that, so it means that if we get the mean value of it, its average is two punishment per person, right? But actually, it's not. So what is the what is the two punishment? That's the mean, the average. So there is a thing called your taxable income rate. Okay, what is your taxable income rate? That is my rate, the 2%. That the average. We can be earning 150,000 in one job. We can be earning 100,000 in each job. But when it looks like to the Uncle Sam rate, there is your tax rate, the exact tax rate. It's not Paul's getting 3%, three punishment. Kay's getting one punishment. It's not like that. Even though we're on a different bracket, but what will Uncle Sam do is add all of those, right? At the end, there's a mean wage tax rate, okay, which is totally different from the bracket. Now, this is gonna confuse you, right? Because this is additional number. What I'm saying here is, although we don't get the same punishment. It's progressive. Every time you grow older, you get harsher punishment. You can be on the jail, right? You know, what I'm saying is progressive means that we are growing. Every time our money grows, we are getting hit taxed differently, bigger taxes, right? When we're growing older, the punishment of a minor will not be the same as the punishment of an adult. So this is similar, progressive, right? Punishment. Am I saying taxes are punishment? Well, taxes are expenses, right? And it's treated progressively. So so now you have to keep that in mind. The higher their income is, yes, there is higher taxation rate, but there's ways we can do to lower it. Okay. So
Yeah.
that's my easiest way to understand how taxation bracket progressive rate goes. Um, and it's different per state. If you live in Florida,
Right.
you don't have to worry about state income tax. But if you live in other
Texas.
states, yeah, like Texas, no income state too. But there are also states that are progressive.
We
Okay,
don't have
but
state income tax here, but we pay a lot for property taxes. But thankfully, we
yeah,
just passed a law when we voted.
yeah,
We lowered our
yeah.
property taxes. But yeah, taxes is complicated.
Because taxes is complicated, right? So for me, the way I see the states that have progressive taxes, yes, I will get hit if I do a lot of overtime. If I am high earner, the state taxes will hit me as well.
Mhm.
But there are states that are fixed flat rate. Okay, like example, Massachusetts. Doesn't matter how much overtime I do, the state income tax is flat. This is advantageous to people who are high earner. That's why a lot of people, those people who are earning so much money, they stay in those states because they're not getting hit by taxes as well, by the state.
Right.
Okay, not only going to no state income tax, their next best option is go to state with flat rate state taxes.
Right.
Okay, flat rate. Because even though
I
I
think
make so
it.
much money,
Yeah.
then it's just flat rate. But this is not
Right.
advantageous to people who are low income earner,
Low earner.
because
Yeah. Because
yeah, because if you're low earner and then your tax is here, it's not fair, right? I'm
yeah.
just saying.
I think Illinois is flat rate because I paid five
Yeah.
percent for my tax, and I think Hawaii
Mhm.
too. But I know California is progressive because nurses are getting hit
Yeah.
by 13%
Oh
highest
yeah.
tax.
I'm here.
Like
I'm here in New
like
York.
Marvin,
It's very
like
expensive.
Marvin. Yeah.
New
So
York
that,
has the
that
highest
kind of
state tax.
right. And
New
Yeah. So
guys,
we
York.
let me tell you.
pay. Yeah.
Yeah. How much
Yeah.
is your
In
state
New
tax?
York. Uh, oh my God, I can't remember. I tried to run away from it. When I was single, about 30% of my income goes to taxes. When I was
Mhm.
single and
Wow.
no idea about what I'm doing in life, doing a lot of overtime, more than
That's
30% of my
only
income goes to
taxes. Yeah.
taxes. Yeah, but then when
Yeah.
I learned about using the tax breaks, tax deductions, 401k, 403b, 457, pension, I made sure that I use all of them, or Roth IRA, name it all. Tuition reimbursements. So I took
Right.
advantage of that. All right. So
And just guys, just be
um
aware that yes, go ahead, Kate.
just want to add one more thing. Sorry, Paul.
Yeah.
Why I got a tax bill when I was new, because tax preparer that I used, I just listened to everybody. When you come here to the United States, you
Mhm.
probably will say, "Oh, use this guy, use this guy, use this guy, use this
Yep.
guy," but you're just following somebody's
Verify.
lead. Okay, I
Mhm.
got. I follow the lead. I'm pretty sure the person who referred me does not, has very good intention, but not realizing what this guy was doing to our tax filing. So this guy, he was not a CPA, but he was a tax preparer. All right. So they told me, okay, do this, do this, do that, and then I gotta hit a tax bill of $4,000. 4 years after I did that. 4 years after I filed that tax, I got hailed by I got IRS called me, saying you owe us $4,000. And as a new person, I called that tax preparer. I said, "Hey, help me. What should I do?" And he said, and he was not helping. Okay, he was not
Mhm.
helping at all. He said, "Answer that. I don't know how to answer it." So what I did was I just paid off. What I should have done after learning all this taxation, what I should have done is paid a tax preparer, paid a
Yep.
CPA, not any random tax preparer. You have two options there: CPA and an EA, enrolled agent. Enrolled
Enrolled
agent
agent,
is,
yes.
yes, a person who went through IRS training. and they're very knowledgeable on this because anybody can file your taxes. That's what I learned. But not all of them are knowledgeable and very well trained to do it. So CPA, your tax lawyer, and your EA will be your best person. So now I get another bill of 15,000. Actually, it just went to my bill to my mail last week that I owe Maryland taxes $15,000 for year
Ooh.
2020, right? And if I'm
Wow.
a normal person who does not understand this, I probably would just pay
Yeah.
it because majority of nurses will, let's take this out of our peace of mind, just pay it, don't deal with it anymore,
Mm-hmm.
right? But majority of time we'll do that. But what I learned after learning all these things, I don't need to pay that. I will just need to either answer that directly to Maryland. I'll say, hey, Maryland, what are you talking about? I'm in New York 2020, ravaging that pandemic in 2020. I was never in Maryland. So why are you asking me money? I was not even a resident of Maryland, right? But Maryland was chasing us because we lived in Maryland 2017 and we moved out 2019. So Maryland thought that we were still residents back then. So what does this mean? It means that states, IRS, and city can make mistake. You don't
Mm-hmm.
even have to pay it. Okay? There are also people and human beings that can have mistake. And if you get a bill, the first thing you do is call them and let them explain why are you being billed like that. Because for me, if I don't know, I'll pay 15,000, right? But the real deal there is, if I don't know and it's a big amount of money, pay a CPA. All right. If you're talking about $100,000 tax bill, get a lawyer. There are tax
Right.
lawyers.
Mm-hmm.
Don't pay it right away because these people can make mistake. And the best thing
Mm-hmm.
that I should have done with that 4,000 before is pay a CPA and probably dissolve everything, or
Yep.
or work it out and run my filing. Okay, so I recommend hiring a CPA for people who have bigger tax dues. Okay.
So I just want to share my experience 8 years ago. The first time we filed that, we went to the library and they were offering tax services. And those people who were doing it was retired or not working anymore. So we did not pay anything. But the second year, the CNA from the nursing home that I worked with offered me, hey Anna, I can do your act for only gonna pay me $50. I said, oh, okay. So I gave her all the information. Then after a year, IRS sent us an email, a mail. Remember guys, IRS will not call you or send you an email. They will send a mail. So be careful with those calling you, hi, this is IRS, you owe us. No, 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 no. Especially for those who are newly arrived, okay? So anyway, so they sent me a letter asking more documents, and I went back to my CNA friend, hey, remember you booked our tax? And she never replied. So went MIA. So what am I saying is, like what I said, hire someone that will represent you and will help you when IRS knock on your door. So it will save you uh, heartache and a headache. So, oh, let's say hi to Miss Green Olivar. Hi, Miss Green.
Hi. Good morning, Jean. Um, yes, Sheila. I want to say thank you, call for those comments. Yeah, because you have those exact numbers that are written on
Yep.
the comments for the tax
Mm-hmm.
rates. Thank you so much for putting that in.
We
It's
will
not on top
invite
of
her
my head.
one time.
Yeah. 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 Oh, yeah. Yeah, it was funny. I saw that one. It's yeah. Come and talk with us next time.
Yeah.
It's very interesting. Tax is something that not all of the people know. And the way that I transcribe taxation topic is
Mm-hmm.
like talking about pharmacology.
Mm-hmm.
There is no way that you will understand pharmacology without understanding med surge. And for you
Exactly.
to understand that med surge is you need to understand anatomy and physiology, right? Because
Mm-hmm.
there's no way you will understand med surge without understanding anatomy physiology. So the way I see taxation is you go back taxation and then learn personal finance. Okay, so you will
Mm-hmm.
have to start with personal finance before you will understand taxation very well. So there was a
And you
message
really
there.
have to
What book
invest
do I
some time.
recommend?
Oh yeah.
Yeah, so stick around, listen to people that who of course listen to all, but craft your own understanding, use your critical thinking who you're gonna listen to. We're here to support you. We're not tax pro, like Paul said earlier.
Mm-hmm.
We're not your tax
Mm-hmm.
professionals, but it doesn't mean that we are not educated taxpayers. Okay, we're not
Right.
life insurance agent,
Somebody
but
will ask again, are
but
you
it
an
does not
enrolled
mean that we
agent?
are not
Are you
life
CPA?
insurance consumer, educated consumer.
Sorry.
So you can be
Sorry.
educated consumer of all these things, and it doesn't mean that you need to be an agent. All right.
And remember, it's a
I'm having
hard-earned
problem with
money.
my internet. Do you can still
Yeah.
hear me or see me?
Yeah,
Yeah,
yeah, we do.
yeah.
You do. I think you're just a little delayed. But yes, we do see you.
But Clay has to go
Okay.
in 5 minutes. So Clay,
Yeah,
wrap it
I think
up.
we need I think we need to wrap it up too.
Yeah.
Wrap. Yeah, let's wrap it up. What's the last topic?
Two
Is there
hours.
any more questions? I know, right? Um,
I think we don't have any more questions. Yeah,
yeah.
we've addressed all of them so far. Yeah.
Yeah, so if you have anything that you want to ask, join Lefora, join Travel Nurse, Dr. Nurse
Hacker.
Paul. I have a Travel Nurse Hacker. So we share information there. We're not tax pro, but we are again educated taxpayer because that's what you need to be. Educated taxpayers.
And don't
Okay.
forget every Sunday to watch DNP Unlocked. If you miss the show, you can always go back. Go for Nurse on YouTube. You can make notes, rewatch it, replay it until you understand it.
Yeah. What's our episode for next week? Episode 10. We'll talk about, let's see. I'm waiting for my cue. Hold on. There you go. Tax strategies.
Oh,
I think we've covered a lot of bases today, but we're going to talk about them again next week. We can share our personal anecdotes of how we did it as nurses, as travel nurses, as business owners. So we're going to, again, we're not CPAs, we're not enrolled agents, we are not your licensed professionals. Still consult with
Yeah.
your professionals. And
Yeah.
that's our last episode for November, right? I'll be in Barcelona next week, so I'll see you guys while I'm in Barcelona.
I'll be in my bedroom.
Right.
All right, but I
Thank you,
guess
I'll be
everyone.
everywhere.
Thank
You
you,
know
Nurse.
me. I'm traveling everywhere too. So
yeah,
so I'll be everywhere. I'll pick it up
surprise
wherever it
SK,
is.
surprise SK.
Yeah.
Okay.
Clay is coming here. Bye, everyone.
All
Thank you,
right, bye
Clay and
Okay.
everyone.
Paul. See you
Okay.
next week.
Bye.
Bye everyone.